Well, the Fed is taking a page out of Michael Keaton's book in the new Flash movie when he says, "You want to get nuts? Let's get nuts." And they are preparing to burn the house down. Welcome back to the channel, everybody. I am Mick Alphanim. This article here is from forexlive.com. The Fed is absolutely nuts. And yes, they are going to do more rate hikes. They have to. Did you see what happened when they took their foot off the gas before? They paused, and then inflation did what? It went up. Now, listen, they negate certain information. So you have to understand that this is why everybody's saying, hey, how's inflation going down? And my affordability of living is just in the toilet right now. But let's read this little tidbit here from this article, because things are going to get a little bit more nuts, so to speak, for lack of a better word. It says here, Federal Reserve pricing now suggests a 52% chance of a hike at the November 1st meeting, up from 40% earlier in the week, because everyone knows this is going to happen. And as that happens, of course, the natural course of this is more people are going to lose their jobs. I'm hearing people getting laid off left and right already. This is what I'm reading, folks. So that's going to happen. And you had Jerome Powell just come out and tell people right to their face, hey, more people are going to have to lose their jobs. All right. They're not even concerned with the banks, the pressure that the banks are under. They're under tremendous pressure, by the way. Commercial real estate, that's crushing them right now. Like, they're scrambling to figure out what to do with this commercial real estate problem, this guillotine that's going to decapitate them, for lack of a better word. The Fed says, and not just Jerome Powell, but also Janet Yellen, if you remember, said, hey, listen, more banks may have to consolidate, which means what? Banks are going down, folks, at some point in the future. I mean, if they're going to stick to these plans, more jobs lost, more bank collapses are definitely possible, which is great for individuals like myself, because then that means that gold will skyrocket, silver will skyrocket, and maybe even platinum, which I've been stacking some platinum, will go completely ape crazy, right? But it says here, but for the regular people, they better prepare. They better be careful, because it's a negative thing all around for them. It says here, the jump comes after surprisingly strong ISM services survey showed an acceleration in August, including in prices paid. The index rose to 54.5 from 52.5, while the pricing measure hit 58.9 from 56.8. It says the market is grappling with how high Fed rates will go and how long they will stay there. Fed officials have clearly signaled that they will leave rates unchanged this month, but we'll be watching the data to decide on what's coming next. Some numbers have begun to moderate, but the ISM services sector is a great forward-looking indicator and suggests there is still some strength. One angle, it says, that this writer has been contemplating and have written about before is a bit of a boy who cried wolf scenario. There was so much talk of a recession at the start of the year, and companies hunkered down and perhaps consumers tightened up as well. Well, they forced a lot of the banks to tighten up lending. I know that. That's definitely having a huge effect right now. So I think a lot of individuals have tightened up, but it's not a boy who cried wolf scenario. If you look at, like I said before in a prior video, M2 money, there's never been a lower amount of M2 money except for in depressions, right? If I said that eloquently, my apologies. It says, obviously, it never came. So it's not a boy who cried wolf scenario. It's not a recession. It's a depression. I've been saying that for about a year and a half now. It says, obviously, it never came. And now companies, it never came. Are you serious right now? See, this is the delusion I'm talking about. This is absolutely insane to say such a thing, and tells me that maybe some individuals aren't doing their complete research. You see, you got to look at reputable sources. You have to look at some of the mainstream sources. Then you have to talk to the people on the ground, and you will see this is a depression environment. M2 money has never been like it is now, except in a depression. You have more people saying it's harder to find jobs, even though they say that there's jobs out there. You have all the banks tightening lending. You have liquidity problems everywhere. Everywhere there's liquidity problem. Even with the Fed. The Fed even said they have liquidity. They said that most of what they have, you can look this up, folks. The Fed said last year that most of what they have has been rendered illiquid. So they've been trying to solve this liquidity problem. You have a skyrocketing debt occurring because they've removed the limit on the debt and that little deal that they made. How can you say that nothing is occurring? All right, so let's move on here. So now we have this next article here from Bloomberg.com, and it's titled Fed's Beige Book shows slower activity growth and hiring. It says here, growth in the U.S. economy and jobs market slowed in July and August. See, this is what I'm talking about. It says, and many businesses expect wage increases to ease broadly in the near term. Hasn't that already been occurring? I mean, don't get me wrong, over the last, year and a half, or maybe 2 years, let's say 2 years, they pushed up wage growth, but wage growth has not been able to keep up with inflation. It has not. And I've been hearing this from all the people across the board, right? This is why people make more money now than they did before, but they're struggling more now than they did before. Makes sense? This says the Federal Reserve said in its Beige Book survey of regional business contacts, quote, contacts from most districts indicated economic growth was modest, unquote. I told you, economy is terrible right now, no matter how they want to paint it. And what's happening is they can't hide it now. It says the Fed said Wednesday in the report published 2 weeks before each meeting of the policy setting Federal Open Market Committee. Now let's move on here. We got more big news, folks. The world is changing rapidly. Keep up with these things here, right? This is from Watcher.Guru and it's titled US dollar global reserves drop below 60%. Let's scroll down here and see what's going on. Okay. It says here, the US dollar share in global reserves fell below 60% for the first time in decades. According to a new report, they are dollar dumping like you wouldn't believe. I don't know that they believe that they can usurp the throne of the dollar, but they definitely want to injure the dollar for sure. And that's simultaneously while the US government itself is injuring the dollar and diminishing its worth rapidly. Take a look at the historical charts. It says while the US dollar is experiencing a dip, other currencies, let me pause there. A lot of people say, look at the DXY, and DXY is strong. That doesn't indicate the all of the different variables that are very injurious to the people who have to use the dollar. All right, it just doesn't. All right, it's very limited what that conveys. It says other currencies like the euro, pound, and yen are seeing a rise. The development is being observed as a growing number of countries begin to settle trade in their national currencies. And I warn people about that local currency trading. We've been talking about it for a long time now. All right, that's going to be major. Most people were looking at this one common BRICS currency, which sure, if they roll that out and is gold backed or commodities backed, really, then that definitely could be significant. But as of right now, they haven't done that yet. So what do we have to look at that they're actually doing? They're trading in local currencies. And that's going to be a big kneecapping to the US dollar. It says here the de-dollarization process gained steam after BRICS initiated the idea of ending reliance on the US dollar. All right, let's move on here, folks. We have some more news we definitely need to keep up with. Here we go. This is from firstmetro.com. Oil steadies near $90 after OPEC plus leaders extend supply cuts. Says here, oil settled at a nine-month highs as investors digested a decision by OPEC plus leaders Saudi Arabia and Russia to extend supply curbs through the end of the year. I believe there was another OPEC plus member that also was doing cuts, but they're just highlighting the main actors, I suppose. It says here, the global benchmark Brent settled above $90 on Thursday, the highest since November. Adding to bullish sentiment, Saudi Arabia lifted official selling prices for its flagship Arab light crude to Asia to a 10-month high, a signal of its confidence in demand. Still, crude is flashing warnings that it is overbought on a 14-day relative strength index basis, raising the risk of a pullback. All right, we have one more little article here on oil. So this article here is from oilprice.com. Now, as oil prices are going up, how does that affect everything else? How does that affect the overall economy of the United States? Let's read this little tidbit here. It says oil prices could hit $107 a barrel next year if OPEC plus producers do not reverse their production cuts in 2024. Goldman Sachs said, noting that a triple-digit price is not the bank's base case scenario. It says on Tuesday, Saudi Arabia extended its 1 million barrels per day cut through December 2023 in a move it says reinforces, quote, the precautionary efforts made by OPEC plus countries with the aim of supporting the stability and balance of oil markets, unquote. The cuts, which mean that the Saudis will pump 9 million BPD until the end of the year, will be reviewed monthly to consider deepening the cut. Wow. Or increasing production. Come on now. They will lean closer to deepening the cut because right now it's all about going against the West. I promise you this, right? Depending on the state of the market. Russia also extended its 300,000 BPD export cut into December, with option to review every month and potentially deepen the cuts or increase supply according to market conditions. So big things are happening globally, economically. It definitely is going to have a huge effect on the U.S. We will see. These things take a little bit of time, of course. But now that you have that information, what are you going to do with it? I hope all of you are doing fantastic out there. Thank you for subscribing to the channel. And until next time, folks, let's get to the money.